buying opportunity, in fact, away from those. And obviously, you can see that we start getting some nice Baltics in here, and you start wondering about what's going on in this area. And the big question is that sell visible? Well, let's take a look and see if anybody can spot it. Nope. Disappointing, right? Well, that's interesting. 60 contracts, that's interesting. Oh, well, wait a second, I wonder. I don't know, Paul, was that visible? Sometimes I wonder if it's visible. It's only 315 contracts at that stage, guys, 315 contracts. But would anybody think that would stand out? Does anybody think that stands out there? The price, 1860 evens. 1860 evens. Now, obviously, there was a lean at this price here, but the price never dropped below that lean. You can see actually that the delta went negative into that price. The delta went negative. The delta was trying to go negative. The book went negative into that price. And obviously, what happened next, of course, was that the market just instantly sold off. Now, come on, guys. Is that not incredibly obvious? Is that not a benchmark in a value area that was so obviously bearish? Is that not what you're trying to find for a trade? When you look at that value area and you can see that the short-term value is now dropping hard and its macro value is dropping hard, and this is day high and it's a wholesale price level. Is that not the absolute perfect example of what a benchmark sell would look like? Of course it is. And the benchmark sell goes and makes $500. And if you have to wait all day for that sell, guess what? That's what you should be doing. That's what you should be doing. And it's got to be in your book. It's got to be. It's one of those trades that I would get really, 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 really annoyed at if you didn't have that trade. Because it's the best trade on the day. It's the best trade by a mile on the gold markets today. And if you've just got to get in these bits of business, haven't you? You've got to be on these bits of business. Because you're not likely to get something as obvious as this, possibly ever. You know, it's as obvious as it ever is going to be, is what I'm saying. So yeah, got to have those deals, guys. You've got to have those deals. We suggested everybody puts a little bit of pressure on our bond. We were a little bit disappointed with the poor auction we had, and then boom, all of a sudden our short selling on bonds worked out an absolute treat. We got this big rip to the downside to 26s, which finally gave us our $1,000 on the day. So we finally got our full $1,000 from the original sells up at the 28s, 29s, 30s. We got down to the 25s, 26s, 27s, 28s. And that is exactly how we're trying to obviously get that business done in here. So you can see obviously what's also happening. You can see obviously there's a very, very nice bit of curve attached to some of that business. But obviously on the spike, the 2s, 10s rallies massively, the 5s, 10s hardly moves. And that tells us to not be on the short trade any longer. Take the $1,000 and be happy with your day's work. Remember, we're trying to be in this concession for this week. We're trying to be in a concession because we obviously have the 10-year auctions coming up. So we have the 10-year auctions coming up. The concession for this month has been relatively quiet. So obviously, based on the fact that we've had a relatively quiet month so far, we obviously try our best to try and be sell side only today, guys. So it's basically the same on bonds as it is on gold. It's a sell side only kind of market today, and that's what we've been trading, sell side only. Now, obviously, one of the big drivers for today's market is the positive risk tone environment. So you can see quite clearly by just putting the S&P on top of the bond, and you can see that that positive risk environment is a very, very strong motivator at top edge bonds. I mean, if there is no risk, because equities are having a relatively good day today, well, you don't need to have bonds, do you? You don't need to have that delta exposure hedged by buying treasuries at high prices. So that brings the treasury sellers back into the idea, well, I can sell for concessions. And that's what they would want to do today and tomorrow and on Wednesday. They would want to be selling, if they can, for the concession process. And that's what we've been doing. That's what we've been doing. So this is a pretty straightforward trade, a pretty easy trade, and a pretty good trade actually when you think about it. $1,000, yep, we'll take it, right? We'll take it. Prior session lows, of course, that we've just traded into that you can see in the background there, and a great place to take some monies. We would expect the concession to be a lot deeper than this over the course of the next 3 days. So for the next 3 days, for the next 2.5 days, you'll find that I'll be predominantly selling bonds if I can, assuming equities hold a bid. I will nearly always be only selling treasuries. It's going to be very, very difficult for me to be long treasuries when equities are bid at the present moment. So really, if I'm going to trade anything, I'd really just need to be short treasuries. Now, why does that have an impact on selling gold? Well, if you're short treasuries, you probably already understand that short treasuries means higher yields. You probably understand that higher yields usually means higher real yields. And you understand that higher real yields is usually very positive for an unyielding, a non-yielding product like gold. So this idea of selling bonds leads into the marketplace for selling gold as well. And that's basically what we've been seeing this morning is short bonds, short gold. Short bonds, short gold. Pretty good? Pretty good. I wanted to introduce you to Max. And obviously on Friday, we extended our Thursday night session to a Friday as well, and even some of the weekend to try and get a kind of final look at what we're doing here. So let's just scroll backwards over the last short while. Now, what we've done with the Max is we've now put. If you remember what we did last week was we started to put Max into a kind of DEFCON type narrative. So we had DEFCON or TradeCon 4, 3, 2, 1, and obviously if we got 1, we had almost a guaranteed trade coming in. You can see that there's a Max trigger starting to fire up into this higher price just now, but obviously we still would need a lean before we would ever contemplate taking any business up here. So obviously that's what you would need to see before you would do any business on this occasion. But let's go back a step or two in this area, and let's just look at some of these previous trade ideas. So you can see that there's 3s and there's 2s. We're just counting how many reds we have. The most important ones are at the bottom 2. The most important ones that we have on this chart are the bottom 2 reds, the bottom two fills. Okay. So if we get the bottom 2 fills, we're starting to build a stronger story. We're starting to build something that's not only a good-looking trade, it's a good-looking trade that has activity getting done on it, and that's what we're paying attention to. So if it takes basically 3 colored boxes to just even put you on warning. 2 colored boxes or 1 colored box, no interest in it. 2 colored box or a single colored box, guys, no interest in it. So it takes 3 colored boxes to even pay any attention to it. Now, as I said, if the colored boxes are coming from the bottom 2 areas here, then it's slightly more interesting. But obviously, as we start to get into 4 colored boxes and then 5 colored boxes, we can obviously start paying attention to that for possible trades. Okay, so we start watching for those areas. So as we start scrolling backwards, we can see that there's a couple of occasions where we see 3s and 2s and 3s and 3s and 2s and 3s. And then we got one here that had 4 in it, but 4 isn't a full trade. 5 is a possible trade. 4 isn't a full trade. We still haven't got a lean on that sell, by the way, guys. I still haven't got a lean on that sell, so I'm still not taking a bit of business at the moment. So I did have a possible all-in maximum sell, but I simply haven't had a lean to do the trade with just yet. We did have the trigger at 53.5, and the price has rallied to 55.25, but I have not got a lean to trade against. So for me, no trade on that max trigger. At the moment, no trade on that max trigger. But into the bottom edge, you can see what happened in here. Into the bottom edge, all the boxes lined up, and we got a max buy trigger. And that max buy trigger gave us a baseline bottom edge. It didn't reverse it instantly, This is a commercial buy, so generally as a rule, it doesn't. That's why, as a retail trader, you're generally as a rule not trying to sell it the second you see it. You're trying to find the lean to sell it against because it's the start of a possible end. And you'll see this as we progress through some of the previous triggers. It's the start of an end, not necessarily the end itself, but the start of an end. So you can see in here, this was the start of an end, and then 2 or 3 minutes later, the price exploded north, and we got a maximum all-in buy that made a lot of money. If I scroll backwards, you can see that there's not a lot of other maximum all-ins. We can see we went through a period here of warnings, but we never really got, we never got the bottom 2 boxes filled in any way, shape, or form. So there was no tradable opportunities in there. As we scroll backwards, you can see that this developed out into nothingness during this period here. You can see we got very close to a trigger just in here. You can see that we got 1, 2, 3, 4, 5 boxes filled, one of which was at the bottom. So that's 5 boxes plus a bottom line, which is good news because 5 boxes plus a bottom line is what we would have called the DEFCON 2 level. And obviously DEFCON 2 is a possible trade, and that gives us a sell trade against that price area. And again, for about 2 minutes, the price stalls in this area and then drops away from that price. Now, why is this interesting? Well, we'll come to that in a second. We had another DEFCON 2 trade here, and again, the price stalled for a few minutes. And in the background, we actually had an all-in maximum sell trade right there. Now, you can see this is not necessarily the trade that causes the reverse. It's the start of the potential reversal. That's the point. It's the start of the potential reversal. And then it came back up and it tested, and it came back up and it tested, and eventually you can see obviously that test resulted in a great few levels across that area, which resulted in ultimately that very, very nice selling price to the downside on the S&P. Very, very, very good top line. But it's not one trade, is it? It's not necessarily just one trade. It was the fact that when we got that, it jammed the price for a while, gave us a good level to start working against, and we were able to make a lot of sell side rotations with a lot more confidence in those areas. So on the chart, you can now see that we've got 2 maximum all-in trades. We had a maximum all-in buy trade, which gives us a starting point for an end, and that's a great starting point for an end. The price rallies beautifully, tests it, rallies, tests it, and then rallies beautifully. Starting point for an end, and some very, very nice profits. Thank you very much indeed. Hold on a second, I'm just taking my first profits on that short trade. I did finally get a sell trade on that max top line. I'm just taking some monies down into the 54s and 54 quarters. So we're squaring away some of that position just now. Okay, that's all done and dusted. Okay, so you can see we've got a max bottom edge buy, tested, rallied. And as we go through the processes, you can see there's not a lot of other max trades. We got a near maximum sell trade at the top edge, and it turned out that was actually the day high up there at that stage. You can see that was actually the day high up there, almost a maximum all-in. We missed it by 1 single point for an all-in trade. Into the bottom edges there, nothing much to speak of. Nothing much to speak of. We got a near maximum sell trade there, a nice little sell, and it jammed the price. It wasn't an all-in maximum sell, but it was a DEFCON 2 sell, if you like, and did jam the price beautifully, made some nice easy money. And if we scroll backwards, you can see not a lot of other trades. We had an all-in maximum sell again there, and again it did drop, and it didn't stop the price this time, but it did drop, and it just jammed the price enough. And worst case scenario, a scratch trade. Worst case scenario, a scratch trade. We got one off the maximum in here, so a possible buy. We had an all-in maximum sell here, and again it gave us the perfect line across the top edges for a long time. Selling opportunities to maybe join in with that short trade off that top line price. Very, very nice indeed. Nice easy money and we got an all-in maximum buy trade off of this bottom line here, which gave us a perfect buy with a retest a couple of times for that buy side swing. Very, very good trades, right? Very good trades. So you can see that when we start seeing these areas, you start paying attention to them because they might be areas to watch for near max signals in the future to give us the storyline, because you can see max always turns the marketplace. Whether it's the full reversal or just a turn doesn't make a lot of difference. If it gets us into a break-even profit from the original signal, well, that's all we can ever ask for from anything, isn't it? Getting to not lose money in the markets whilst at the same time holding the possibility of making a very nice profit has to be something of value to us. And that's what we're trying to accomplish through this whole process. So we come into the current top edges that we had this morning. We can see what was going on. Top edge sells, beautiful, beautiful, beautiful. And then the break to the downside. And then that bottom edge buy, which was spectacularly good. Big volumes as well at the bottom edge. And obviously we've just seen into the top edges. We can see that into the top edges, as we come across to the actual trigger itself, you can see just what happened into the top edges. There's the max sell right there. So we just draw a line across that price and we start watching that for a possible lean. We start watching for the possible lean, and what happened? Well, you can see what happened. The price went up into that area. There was a lean that happened on, what price did we get the lean on? 55s, okay, 55s. We got the lean at 55. So we got the lean at 55s, which is right there. And against that max all-in sell, we got the 55 lean. And there you go, maximum drawdown of 2 ticks. And a profit of 52.75, which is okay. And a reasonable trade, nice outcome. And as I said, max itself is not the trigger. The trigger is the lean part of the trade. So we start watching. So when you see max, you draw a line and you start watching for the leans. And that's it. That's all you do. You start watching for the leans. You start working into this as a possible area. And you now know what you're looking for. And this is how the trade's worked out. You can see we went from basically the bottom tick price here. That was the last max all-in trade there. And then this one here, which is an all-in sell. You can see we're not a million miles away. Now, the reason why we probably never got exactly what we wanted was because of this, obviously, this paycheck in the background. But Max isn't necessarily paying attention to that paycheck, but obviously we would be able to pay attention to it, knowing that there was a lot of liquidity up at that price area to lean against, and therefore putting ourselves into a little bit more of a passive storyline into that area, which is exactly what we did. And as a result, we got a very nice response. Now, into the bottom edges, you can see we got 4 at the bottom edge there on that big down candle there. We got 4 at that stage. And obviously when we got 4 at that stage, you know that that's a possible buy trade there, if not possibly just an exit price. And that's exactly what happened. We got 4 in a row, and that's obviously coming back into that big toxic candle right there. We got 4 in a row and it jammed the price. Now obviously the one that gives us an actual trigger is the second from the bottom, and you can see that's the one that's missing in here. The second from the bottom is missing in here. So there's a lot of value to sell it, but we're not getting them selling into it. Now we get that possible view that the second from bottom starts paying interest. See it? See how the second from bottom starts showing up now? So that's them now paying attention to the short trade off of that 58s, 57 and 3/4 area. And obviously the job now is to see if we can get relatively close to that as a possible sell. 58s becomes a possible sell trade narrative right there. So not far off a full max sell at 58s. Currently trading 57s, 56 and 3/4. And we were very, very close to a max sell at 58s there. Very close. But that's where we're at just now, 56 1/4. See how nice that is? See how nice that little trade was? Perfect. It's just a pity it never went back up to the 58s. Now I did cross the spread to get that trade on, to be honest, but it is what it is. It's up to you. But obviously you've got no confidence in this just yet because you've only just seen it. But I've seen it now for, basically for the for Friday night's closing session, and again for today's session. Last Friday night, by the way, we had the top tick of the price. The whole market top ticked into that area on Friday night, and it was just the glorious sell. I think I took a screenshot of that one for Kim when obviously we'd finished this project on Friday nights. Friday night, I'll go backwards and I'll see if I can show you it from Friday night, guys. It was quite special. So you might be able to spot it now. There it is there. Do you see it? With it to catch up. So you'll see just in there, you'll see that we get everything lined up perfectly in line at that stage there. See it? 4122s, guys. 4122s was the lean price. 4122. Look at what happened next. It was the top tick of the day. Literally, it was the top tick of the day, guys. 4122. Top tick. And the day closed down at 4100. So it was $1,000 top tick sell. $1,000 top tick sell, guys. So obviously quite a competent little fella. When it puts its mind to getting these trades on, we can obviously start watching these areas as possibles. But every single trade so far with the lean has been able to get into a profit position without sizable drawdowns. That last trade was 2 ticks, guys, 2 ticks. So that last trade there had a 2-tick drawdown before making that nice easy money. We were 1 away from getting that sell trade up there, and we got a lean against 58s. It's now trading at 55.5. So another easy profit on a max 2 trigger, not the max 1, which would be the all-in trade, but the max 2 trigger into the top edge. We got the lean at 58s, traded a low price 55.5. Pretty good. Pretty good so far. So far, early doors. We haven't went through a full US cash open yet, so we'll obviously be able to watch for any little bugs that happen during the cash market open today in just 40 minutes. 40 minutes to cash open. Seems as if it's been a very slow day today, so I think it probably has been a slow day. I mean, we've seen a lot of markets just cycling around a little bit. And I think when you get cycling markets rather than trending markets, it seems to be a perpetual cycle of stretching time out. We seem to do a lot of trades, which makes it feel as if it's a long day. But it is what it is, guys. It is what it is.